Hi everyone, welcome back to the TechNet vlog after a long break. So, the last time we looked at strategy analysis, we looked at the overview, we looked at, defining the current state. Now we want to look at, how the picture or what would determine the state of our future state. So, the most important thing when it comes to defining the future state is that it helps you to determine the set of necessary conditions to meet the business needs. So, like these, like we're not trying to solution at this point. We are looking at the conditions we are going to use to meet the business needs. Okay. So, all purposeful change must include a definition of success. So, whatever you do, you need to have a definition of success, so that you know that you have something guiding you that when you achieve this, okay, you say, okay, we've achieved success or we've achieved what business wants. Okay. Business analysts work to ensure that the future state of the enterprise is well defined and that it is achievable. So you're trying to make sure that you work towards the that whatever the enterprise, the future state of the enterprise, it is well iterated, like it is well defined, drilled down. You have a good understanding of it, and looking at it, it is achievable with the resources you have on ground, and that your key stakeholders, they are onboarded. Okay, you guys are talking the same language, having the same understanding, all aligned. So as with current state analysis, the purpose of future state analysis is not to create a comprehensive description of the outcome at a level of detail that would directly support implementation. So, just telling you that you are trying to understand the future state at this point, okay? It doesn't mean that you are trying to solution. It doesn't mean that you are trying to, bring you're trying to cross every T or dot every I. You're trying to get a high level understanding of what you need, or what business needs when it comes to implementation. So the future state will be defined at a level of detail that allows for competing strategies to achieve the future state to be identified and assessed. So when you say competing strategies, you have other things, ways you want to, map out, or you want to plan, let's say what business needs. So you now say, okay, we have this as a plan, we have this, we have this. So we are now trying to, take a decision on the strategies or the different ways we want to achieve or want to go towards achieving business needs. So also provides a clear definition of the outcomes that will satisfy the business needs. So at the end of the day, you want to come up with a clear definition of what you feel will satisfy business needs. Okay. Now, when it comes to definition. So don't lose track of that. Details the scope of the solution scope. So it gives you an idea of what this should cover, so that we don't go beyond the scope or on the scope. So allows for value associated with the future state to be assessed. So whatever value that is associated with the future state, you are able to, assess that, and also enables consensus to be achieved among the key stakeholders. So at the end of the day, everyone is onboarded. So the future state description can include any context about the proposed future state. So within any context, the main thing is that we are talking about the future state. Okay, it describes a new, removed, and modified components of the enterprise. So we were talking about the current state. Now it's now talking about something new, something refined, towards whatever the enterprise needs. So it can include changes to the boundaries of the organization itself. So telling you that when it comes to future state, it's just not about like maybe building an app or a website. This could be changes to the boundaries of an organization itself. So this could be like making changes in an organization, such as entering a new market or performing a merger or acquisition. So maybe it could be introducing a new product into your market, or even merging with another company, or even acquiring another company. So the future state can also be simple changes to existing components of an organization. So it could be as simple as changing one or few things in an organization, such as changing a step in a process, maybe a business process. They don't want this again, they want it this way, or removing a feature from an existing application. So maybe on your application, you were taking payment. Now you notice that it messes the whole thing up and you don't want to take payments anymore. Okay. Change may be needed to any component of the enterprise, including but not limited to any of this. So it could be business process, functions, lines of business, organizational structure, staff competencies, knowledge and skills, training, facilities, desktop tools, organization, location, data and information, application system, and all technology structure infrastructure. So descriptions may include visual models and tests to clearly show the scope, boundaries, and details. So, when you are describing, you want to, pull audio visuals or something that would give us, an idea of, okay, what we need to cover, and also detail as well, which is very important because you're trying to get everyone on board, get your business to understand what is going on. So you want to drill down to the barest minimum. Relevant relationships between entities are identified. So if there are relationship between what you're working, you identify them and describe as well. So the effort required to describe the future state varies depending on the nature of the change. So it could be big, small, medium. So whatever efforts you need to define it depends on the size, it varies actually. So the expected outcomes from a change might include specific metrics or loosely defined results. Okay, describing the future state allows stakeholders to understand the potential value that can be realized from a solution. So you see, you are trying to, like, we are still saying the same thing, that you're trying to make them understand, you're trying to get them to know, like, at the end of the day, look at the value we want to achieve, which can be used as part of the decision making process regarding the change strategy. Yeah, this would help them take decisions. Okay, so, and yeah, in environments where changes result in predictable outcomes and predictable delivery of value, and where there are a large number of possible changes that can increase value, the purpose of future state analysis is to gather sufficient information to make the best possible choices among potential options. So trying to tell you that when it's predictive, when like your outcomes, you're trying to gather as much information as possible so that since you have so many options, you are able to say, okay, let's pick from any of this, since we know what we're up against. So, but in cases where it is difficult to predict, you don't know what the outcome is, you don't know much, you don't have much of information, it's now difficult to predict the value realized by a change. The future state may be defined by identification of appropriate performance measures to produce an agreed upon set of measures for business value, and the change strategy will support exploration of multiple options. So when it's not predictive, when you don't know what is up, and what is appropriate, or what is coming, it's quite difficult. Okay, so the best thing is to just set down measures that, okay, when we hit this milestone, we know we've gotten to the extent where we want from here. So yeah, you put down measures, put down rules and all whatnot to guide you, so that you don't just go into the project like that. So looking at the input, business requirements is the input, because you would need to understand your business requirement for you to, start looking at, scope of, future state. So the problems, opportunities or constraint that the future state would address. Yeah, so looking at this diagram, you know that the input is business requirements, the guidelines and tools. You have your constraints, your current state description would guide you, metrics and key performance indicators would help, organizational strategy would help as well. You now define your future state, and in terms of output, you'll be looking at business objectives. You now would have the business objectives. Also, you have this future state described, and then the potential value that you tend to achieve at the end of the day. So the tasks using these output, you can have prepare for elicitation. Also, you can have manage stakeholder collaboration. Also, one of the tasks of using this output would be prepare for your elicitation. So for elements, number one element here is business goals and objectives. Okay, so a future state can be described in terms of business objectives or goals in order to guide the development of the change strategy and identify potential value. So you need your business goals and objectives or values or whatever to guide you in whatever decision we are trying to take. So, business goals and objectives describe the ends that the organization is seeking to achieve. So, this is very important because it helps you to keep in scope. It helps you to, like understand, what business wants to achieve. At the end of the day, you ensure that you align with their goals and objectives. And this can relate to changes that the organization wants to accomplish. So the goals and and objectives could be whatever the organization wants to achieve, or current condition that it wants to maintain or even put away. Okay, so goals are longer term, ongoing and qualitative statement of a state or condition that the organization is seeking to establish and maintain. So examples of business goal could be, create a new capability such as new product or service address a competitive disadvantage or create a new competitive advantage. It could also be improve revenue by increasing sales or reducing costs, increase customer satisfaction, increase employee satisfaction, comply with new regulation, improve safety, reduce the time to deliver a product or service. So high level goals can be broken down to the general strategy into areas that may lead to desired results, such as increased customer satisfaction, operational excellence, and or business growth. For example, a goal may be to increase number of high revenue customers, and then be further defined or broken down into a goal to increase number of high revenue customers in the 30 to 45 age bracket by 30% within 6 months. So now, telling you that a goal could be big, that you need to break it down and also fit it into maybe age bracket or even time or even demography and all whatnot, just to make sure that you are tracking expectations, because at times when it that is that big is ambiguous. Okay, now as goals are analyzed, they are converted into more descriptive, granular and specific objectives, and linked to measures to make it possible to objectively assess if the objective has been achieved. So objectives that are measurable enable teams to know if needs were addressed and whether a change was effective. So just like we're saying, so when your objectives are measurable, it helps you to tick off like, oh, have we done this? Have we done this? Have we reached this mark? So it guides you. So defining measurable objectives is often critical to justify completing the change and might be a key component to a business case for the change. So a common test for assessing objectives is to ensure that they are smart. So it's just like a way of you measuring your objectives, and this guides you. So smart means it's specific. This is like it's not ambiguous. You have observable outcome. It's measurable. You can track it. It's achievable. This is feasible. So it's relevant. It aligns with the vision of the enterprise, mission and goals. It's time bound. It has a framework, of time. So the second element is the scope of solutions space. So decision must be made about the range of solutions that will be considered to meet the business goals and objectives. So telling you that whatever decision that you're making, it should be within the range of solutions that will be considered to meet business. Shouldn't go out of that. The scope of the solution space defines which kinds of options will be considered when investigating possible solutions, including changes to the organization structure or culture, capabilities and process, technology and infrastructure, policies, products or services, or even creating a or changing relationship with organizations currently outside the scope of the extended enterprise. Just telling you that whatever um, solution or whatever decision you are making should be within a scope of whatever it's aligned with the organization. Okay, so you may have possible solutions, but for example, a typical example is when you want to build a website that helps an organization to collect payment. When you go for demoing, maybe for like looking at possible solution for or possible recommendation for the organization, whatever demo you're getting from the vendor, whatever vendor you're approaching should be those that build payment solutions. You shouldn't go out of that scope, looking at other solutions or other possible, ideas for business, because you are working with time. So solutions in each of these areas generally require specific expertise, from both the business analysis and the delivery team. Very, very important. So that you know that what you are seeing or what you are going for is what the business needs. So the analysis for this might happen on different levels in the enterprise, and the scope of the solution space is not necessarily related to the size of the change. Okay. So it's not about the size of the change, even a small change might require looking at enterprise level business objectives to ensure alignment. Yeah, making sure that yes, we have a very big requirement or we have a very big ask from business, and but business wants us to drill it down to this. So we drill it down to something smaller, but at the same time, we want to make sure that it's meeting the overall objective. Okay, or rather, it meets the overall objective of what the business wants to achieve at the end of the day. So if multiple future states can meet the business needs, goals, and objectives, it will be necessary to determine which ones will be considered. So, if multiple future states, like you have multiple, like solution or multiple, ideas and stuff that will meet business needs, it's very, 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 very important that you determine which ones will be considered. You can't consider everything. So this decision is typically based on the value to be delivered to stakeholders and requires an understanding of possible change strategies. So your stakeholders, what they need is still very, very important in this case. So you need to also consider the value to give them at the end of the day. So the critical conditions for the decision are dependent on the overall objectives of the enterprise, but it will involve an understanding of the quantitative and qualitative value of each option. So, whatever option you are picking, please consider the qualitative and quantitative value that it brings to business at the end of the day. The time needed to achieve each feature, also consider time as well. Which one will give us our solution or what we need at the shortest time, at the same time give us value, more value. And the opportunity cost to the enterprise. Okay, if we invest in this, how much are we getting, or how much are we even investing? How much do we have at the end of the day? Also, how much are we getting back? Constraints. Constraints as an element, it describes aspects of the current state, aspects of the planned future state, and states that may not be changed by the solution, or mandatory elements of the design. So now the constraints, it tries to look at what is currently obtainable and what do we plan that may not be changed by the solution. So at the end of the day, even if we bring this solution, okay, what can't we do with this? Let's say out of scope, or what can't we achieve with this? Or mandatory elements of the design. So they must be carefully examined to ensure that they are accurate and justified. So constraints like what can't we do? Constraints may reflect any of the following: budgetary restrictions. So maybe we are restricted by budget. Yeah. Time restrictions. Oh, we are restricted by time, technology, infrastructure, policies. Oh, there are some rules in the organization that, may prevent us, or even legal, limits on the number of resources available. Okay, I'm looking at the resources. Do we have enough people to, get on board this to help us, to maybe to act as a SME? Restrictions based on the skills of the team and stakeholders. Okay, our stakeholders will need to come on board technology, but we don't have that time. How do we come in to help them? So it's a constraint. So a requirement that certain stakeholders not be affected by the implementation of the solution, compliance with regulations and any other restrictions. Okay, so organizational structure and culture, very, very important. So the formal and informal working relationship that exists within the enterprise may need to change to facilitate the desired future state. Organizational structure is very, very important. So the way things are done in the organization may seem to look as though they would impact the solution. So changes to reporting lines can encourage teams to work more closely together and facilitate alignment of goals and objectives. So even if it means changing reporting lines, like so that you get people closer to the project. Maybe let's say that, oh, you are doing this project with, maybe let's say, the executive director, and you'll be like, oh, he's busy, can we get someone closer? Okay. So elements of the organizational structure and culture may need to change to support the future state. Describing the components of the future state provides insight into potential conflicts, impact, and limits. So when you are able to describe components of the future state, it gives clarity, to potential conflict, impact, and also the limit that we may face. So capabilities and processes. Identify new kinds of activities or changes in the way activities will be performed to realize the future state. So you're telling us that things will change. So these things that will change when it comes to activities, how would it impact us, when we, at the end of the day? So new or changed capabilities and processes will be needed to deliver new products or services to comply with new regulations or to improve the performance of the enterprise. So also, for example, when you have regulations, and also when you have new regulations, we also know that we want this future state to fit into that, or we want to align it to that. So technology and infrastructure. So if current technology and infrastructure are insufficient to meet the business need, the business analysis identifies the change necessary for the desired future state. So if we have any impact from technology and infrastructure, we need to realign what we are doing, to fit into that. Okay. So like, or we also realign the current technology to fit into what we are doing. Okay. So the existing technology may impose technical constraints on the design of the solution. So for example, we are bringing in a new process while we're using an old technology. That's a good analogy. So these may include development languages, hardware and software platforms, and application software that must be used. So technical constraints may also describe restrictions such as resource utilization. So people on the ground can't use the technology or can't even talk to the process. So message size and timing, software size. Oh, we want to bring in we want to introduce something to our website, but we don't have enough space. Maximum number of the size of files, records, and data elements. Technical constraints include any IT architecture standards that must be followed. So policies, very important. If current policies are insufficient to meet the business need, the business analyst identifies the change necessary for the desired future state. Yeah, maybe we need to bring in like policies that will help an organization use a system. Maybe the organization is that, oh, we can't use a technology outside of our country. So you have to reintroduce policies, or something that would allow that room. Okay. Yeah, policies are a common source of constraints on a solution or on the solution space. Business policies may mandate what solutions can be implemented given certain levels of approval, the process for obtaining approval, and the necessary criteria a proposed solution must meet in order to receive funding. In some instances, a change to an existing policy may open up alternative solutions that would not otherwise be considered. Business architecture, very important. So the elements of any future state must effectively support one another, and all contribute to meeting the business goals and objectives. In addition, they should be integrated into the overall desired future state of the enterprise as a whole and support the future state. So internal assets, the analysis of resources might indicate that existing resources need to be increased or require increased capabilities, or that new resources need to be developed. When analyzing resources, business analysts examine the resources needed to maintain current state and implement the change strategy, and determine what resources can be used as part of a desired future state. So the assessment of existing and needed resources is considered when performing a feasibility analysis on possible solutions, approaches for changes strategies. So your resources on ground, we need to increase them and stuff like that. Identify assumptions. Most strategies are predicted on a set of assumptions that will determine whether or not the strategy can succeed, particularly when operating in a highly uncertain environment. So you want to assume this and assume that. It will often to be difficult or impossible to prove that the delivery of a new capability would meet a business need, even in cases where it appears reasonable to assume that the new capability would have the desired effect. So these assumptions must be identified and clearly understood so that appropriate decisions can be made if assumptions later proves invalid. Change strategies in uncertain environments can be structured in order to test these assumptions as early as possible or redirected termination. So at times people would use maybe let's say proof of concept to test an idea to make sure that this works and all that. So, potential value, meeting the business objectives alone does not justify transition to a future state. Very important. The potential value must be evaluated to see if it is sufficient to justify a change. So, for this can do this doesn't mean it can do it, right? So, when defining the future state, business analysts identify the potential value of the solution. The potential value of the future state is the net benefit of the solution after operating costs are accounted for. So a change must result in a greater value for the enterprise that would be achieved if no action was taken. However, it is possible that the future state will represent a decrease in value from the current state for some stakeholders or even for the enterprise as a whole. A new regulations or increased competition, for example, might need to be addressed for the enterprise to remain operating, but could still decrease the overall value captured. While determining the future state, business analysts consider increased or decreased potential value from external opportunities revealed in assessing external influences, unknown strengths of new partners, new technologies on knowledge, potential loss of a competitor in the market, mandated adoption of a change component. So business analysts identify specific opportunities for potential alterations in value as well as possibility of those increases for individual components of the proposed change. Business analysts estimate a total potential value by aggregating across all opportunities. Okay, you don't leave anything out. So the potential value, including the details of the expected benefit and cost, the likely result if no change is made, is a key component to making a business case for the change. Relating description of potential value to measures of actual value currently being achieved enables stakeholders to understand the expected change in value. In most cases, the future state will not address all of the opportunities for improvement. Any unaddressed opportunities might remain valid after the solution is implemented and should be noted for the future.